Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you as always for coming on today.
Thank you for having me today.
Well, this time yesterday, the futures on Wall Street were indicating another big decline, but despite fears of a second wave of the pandemic in the U.S., stocks were up overnight, partly on talk of more stimulus. What's the story in the global markets?
Yes, as you said, overall market fell quite sharply before in terms of the futures market, but after the market opened, it recovered quite nicely, and Dow Jones was up about 0.6%, S&P climbed up about 0.8%, and NASDAQ jumped by 1.4%. So if you look at the Dow Jones, it's like 700 points recovery. The main reason for that is because of the sentiment improvement after the Fed announced that it will start buying individual corporate bonds a month after announcing the purchase of ETFs only, basically adding the secondary market operation to the mix. If that continues, then clearly the investor trust towards the Fed remains quite strong despite all the concern about the COVID-19 issues. Most of the trigger for the decline that we saw earlier was due to the second wave possibility of COVID-19 that is spreading in U.S. as well as China. However, if continuation of the liquidity injection and government support remains, then we think that the market can have some more room to go up in the future. So therefore, most of the market were basically welcoming this type of the corporate purchase of these bonds and boosting measures done by the Fed.
Well, the bond buying measures you mentioned were welcome news here in Korea, where stocks were up more than 5% today on the KOSDAQ, and in fact, they had to suspend trading for a little while. Tell us what happened on the Korean markets.
Yes, if you look at yesterday, it was exact opposite picture. With the futures market going down in the U.S. By almost 2-3%, Korean market started to fall quite sharply. And yesterday, market was down more than 5%. KOSDAQ was down like 7%. So it was kind of repeat of what happened of Thursday of last week of U.S. market. However, today we saw a very strong recovery as we've seen because of the boosting measures expected from the U.S. as well as the Chinese government. Chinese basically said that they will do additional investment on a fixed asset investment project that amounts to 129.8 billion renminbi, which is very sizable. And it seems that the two power countries, the G2, U.S. and China, are quite obligated and saying that they will do all possible to boost the economy. So if that's the case, then Korea, who has very strong export-related industries and GDP structure, we expect the recovery could come through with these kind of boosting measures coming through the U.S. as well as China. So we think that a lot of issues kind of triggered the big losses yesterday, including the North Korea issues. But if you just look at the boosting measures and the government measures, and Korean government also indicating that they will do everything possible for supporting the economy, we think that the current trend of the equity rise should continue in the future.
Right, and it should be pointed out that by the time the news of North Korea's demolition of the liaison office, the Korean markets were already closed at that point. Now, let's talk about exports for a minute. They were down in May from a year earlier by 20%, but then in the first 10 days of June, we see they're up 20%. What do you make of these numbers?
Sure. As you said, May number was quite horrible, same as the April number. It was down by 23.7% year on year versus consensus of 22.1% for May. And if you're just looking at those numbers, then obviously the concerns are quite high that economy is not recovering, that COVID-19 is here to stay, and it's a long-lasting effect. Those are all the worries that putting pressures for the global market as well as Korean market. However, though, as you said, if you look at the first 10 days of June, it soared. The export was soared by 20.2% year on year, which is a significant rise, and it is a positive indication and positive sign for the global demand. Obviously, the chip side is soaring. If you see the semiconductor business is doing really well, if that's the case, then the fourth industrial revolution is continuing to be happening, and the overall IT sector's recovery is on the right track. Of course, we are concerned about the consumption related in regards to the airlines, hotels, and other services, but that is related to COVID-19. But as far as the IT segment and fourth industrial revolution segment, it is doing very well, and Korea is very well positioned to those sectors. So if that's the case, then yes, we are concerned about the economic condition of global scale. But as far as Korea is concerned, Korea will be the lowest decline of GDP relative to any other countries. And if that's the case, then clearly foreign investors as well as domestic investors will look into Korea as positive in terms of the future equity market trend.
Got it. All right, Mr. Yu, we'll have to leave it there for today. Thanks so much for sharing your insights.
Thank you very much.